Hey, everybody. Thank you for joining us today. I appreciate it. I'm really excited to bring you our guest today, who is Vince Chillura. He is the head of commercial real estate lending at Valley Bank here in Tampa. He's also a friend. He's our personal banker at Mobilization Funding. He's helped us and many, many of our clients for a long time. We really appreciate it, especially during this COVID-19 crisis. At this point, we're recording this. We've just released the first tranche of the PPP loans out, and we are about hopefully getting this approved for the second tranche. Vince is going to go through today all things banking, all things PPP, and really cover with us how to be a good customer, what the banks are looking for, and how to navigate your way around the PPP loan and what's coming next. Vince, welcome. Really appreciate you having you here.
Yeah, thanks so much, Scott, for having me. I appreciate the relationship we have with Mobilization Funding and your team. As Scott said, name is Vince Chillura. I run the commercial real estate lending group at Valley National Bank. I was part of the group that grew US AmeriBank from really zero to about $4.5 billion before we were acquired by Valley just over 2 years ago. US AmeriBank started in 2007, kind of on the ground floor of a Tampa-based institution that grew from zero to a pretty healthy size. And we were kind of instrumental in helping this community grow, and we're happy to serve some of the customers in this market and then expand those relationships. So prior to US AmeriBank, I was with LaSalle Bank, and I went through their commercial credit training program in Chicago and worked with that team for a couple of years, and then transitioned over to US AmeriBank. But happy to be here and excited to shed some light on the banking industry.
US AmeriBank's been amazing for the Tampa in the last 12 years. You guys have been not only just an institution, but really helped Tampa, in my opinion, and many, many others get out of the recession and thrive and grow to what we are today. So now that we've gotten to this banking point, what I really want to do from here is get with you. Okay, what is this PPP loan? This initial round of funding went out. Most people understand what it is and what it's about. But what I don't think they do, and I think one thing we talk about with our clients all the time, is you have to utilize accounting. You have to utilize banking. You have to have relationships with these people. And if you don't, you're not going to get anything. Like, it's just too difficult. You guys even helped two of our clients who would otherwise have not got the PPP loan, one of which was eligible for $500,000. And if they didn't have it, they'd be out of business right now.
No, it's been a unique program and process. I mean, we have taken an all hands on deck approach as it relates to PPP because banks have to administer the program. In EIDL, it's direct SBA. Everybody's still trying to understand what's going on with this smart loan program. But specifically with PPP, we were trying to get our infrastructure in place to accept applications electronically. Everybody kind of stopped what they were doing, and we had all our associates really working on processing PPP. As of last weekend, we had 27,000 applications, and before the funding ran dry, if you will, we had processed just under 7,000 loans for about 1.7 billion, which we thought was a success. And as you compare to other institutions, it was percentage-wise very strong. We had a team, a bunch of tech guys, a bunch of lenders, sort of all hands on deck approach, people working all night for 4 or 5 days, almost a week, trying to get the program implemented and get our process streamlined. And we were successful. And some banks, they took a wait and see approach. Some banks were being very selective in their application. And we were as well. I mean, you talk about the relationship piece. We were clearly giving preference to our relationships first. So you guys came in, we put you at the top of the list. You had a couple referrals that you do business with. We snuck them in. And that's kind of the value of a relationship, because when you have that kind of volume and there's only a finite amount of money, you just have to allocate resources appropriately. So, we did the best we could. We thought it was successful, but we're hoping that in the next couple of days, they'll allocate some more money to the program. And some of the guidance we've received is that since there's so much volume and so many different requests, that we expect that money to run out fairly quickly, like within 24 to 48 hours. So you kind of have to be in the queue. You have to have a banker, somebody that's really being your advocate so you can get in the system, get approved by the bank internally, and then be first in line when submitted to the SBA.
I think one thing for clients or ours or contacts that are going to see this, I think some of these people think big banks are going to make so much money. This is a huge thing for them. It's just a gift horse. They're going to make all these loans and they don't even have to worry about them because the SBA is making it. But is that true?
It's definitely not true. It's really a customer retention tool, and there are fees involved. But if you talk about the infrastructure that we had to get in place, everybody stopped what they were doing. And our highest and best use is going out and making real loans and making a net interest margin on what we pay versus what we lend out. So big picture, it's going to be a loser for the financial institutions. It's a tiered structure. So, there are handsome fees for the smaller loans. But as you get up in the loan amount, it ends up being a 1% fee. And then you talk about the technology and the infrastructure and all the, the resources that are allocated. It's not going to be a big winner for us, but it is a winner for us in the sense that we're keeping people in business and we're doing our part to effectively save the economy, because banks have to be involved in this critical step, which is the liaison between the customer and the SBA.
My understanding of this whole thing was banks aren't really going to make any money on this at all. The margins are predetermined. You have to do all the work, essentially, get it in, almost in a no-win situation. It's like a matter of how many people can you actually get taken care of and then help as many as you can on the way.
Yeah, it's a little bit of a thankless situation. I mean, those that got funded are happy and you helped them out. And those that didn't, it's kind of your fault because you didn't get it processed quickly enough. But again, so much volume, there's a lot to it behind the scenes. And then, the SBA changing their mind and not providing clear and concise guidance has been challenging. But, at the end of the day, we're happy to do it. I think it's a great resource for those customers that need it. But it's not a big moneymaker for us.
Vince, where does it sit today with the new loan quantity coming out? Hopefully that gets approved today, tomorrow, at some point. What's the approach, or is the approach any different than the way it was for the first phase?
Well, I mean, I think it's going to be a little bit of a different approach. I mean, there are certain people that needed the money and didn't get it, right? And that, coupled with the fact that there's so many applications that are approved and ready to be submitted to the SBA, is going to make it fairly swift. So we think that this money, while it's another $250 to $320 billion allocated, it's going to go fast because people are ready. Before, there was a little bit of a learning curve. The application was circulating out there, but the guidance wasn't clear. Banks really weren't assembling applications and being in a position to submit to the SBA. Now you have all these people that were in the pipeline that are approved internally by these respective banks, and it's just a function of whenever the floodgates get open, all these applications are going to be pushed to the SBA immediately. So I think the process is going to go very, very quickly, which is why it's critical to have everything ready to go so that internally the banks can approve these PPP loans and then be in a position to send to the SBA to get the final approval, if you will.
Yeah. Is there a target size business that the SBA or even the banks internally have guidance and they're looking to approve? Like, let's get this many employees or companies that have this much revenue, et cetera. Is there any type of guidance like that at all? Or is it literally just file in, first come, first serve?
Yeah, it's really first come, first serve. So once the bank's approved, it's effectively processing. Obviously, there's clear guidance on number of employees. And in certain industries, you can have more employees than 500 to qualify yourself as a small business. There's revenue thresholds per industry, but there really is no, I think the SBA really is looking for just how swiftly they can process versus they're not going to really differentiate once the loans are approved. They just need to process them. So the banks are doing a lot of the dirty work and the SBA is doing the final check and then approving the loans. And then a E-Tran number is issued and then the money is effectively set aside for the benefit of that customer. So while a ton of loans were approved and received an E-Tran number prior to the money running out, some of those fundings haven't even taken place yet. A lot of that money was allocated and set aside after the money ran out.
If you were giving advice to clients, businesses, business owners, what would you tell them they need to do differently to engage with their bank? We always talk about being bankable, be a good banker, be a good customer, be a good borrower. We talk about it with us, but we also talk about it's even more important when you want to have traditional bank financing and sort of graduate, if you will, to that. What you're looking for, what type of behaviors, responsibilities, paperwork, credit thresholds. If you just kind of touch on that a little bit, I think it would be helpful to kind of these customers to know what that means.
Yeah, I mean, I think big picture, it's sort of a give and take. I mean, it's open and honest communication. It's consistent information. It's being organized. It's a relationship driven business, obviously. Just like anything, if you don't need credit and you're just banking with one of the big dogs, you probably don't have a true relationship with the banker. With some big institutions and some of the middle market players and even the community banks, that's where relationships are crucial. And a banker will really take the time to understand customer needs. If there's a blip, most of the time banks are going to be flexible because we're making a small margin. We just want to get our money back and a little bit of interest. And we're going to work with people as long as they step up and do the right thing. Sometimes that involves some flexibility on both parties' parts, but it's really how people react and having that open and honest communication, being very candid, just like any business, having a true relationship.
It's funny you say that, because one of the things our clients and any contacts we have that we talk a lot about is just telling the story, man. Don't sugarcoat it. Just lay out the facts. The facts are going to detail what they are, and they'll be what it is. And it's a hard concept for sometimes people we're talking to, or even conversations I have every day, to understand. They're like, I'm going to get in trouble if I say that, or it's not going to look good, or it's going to make me look like X. And I always say, look, man, you're going to look the way you look. You're way better off just laying out all the truths, all the facts as they are, as bad as you think they are, and tell reasons why. Anyone's going to be able to accept that. They might not give you the loan, but they're going to accept what happened, and you're not going to be in some extraordinary situation that no one's ever heard of before. That's what I say. But I wonder if you have that same perspective and thought, or how even a traditional banker looks at that.
I think you hit the nail on the head. Clear and candid communication is better than trying to dance around a subject. Like you said a minute ago, I mean, we've kind of seen everything. We were exposed to a lot of different industries. So, I mean, we've seen it all. So I don't think, clearly if somebody's being negligent or committing fraud, that's one thing. But if it's real life, this is what happens in the course of business, be honest and open, and let's try to figure out a way to mitigate that. And oftentimes it may be a red flag or a risk in the borrower's eyes, but not necessarily in the bank's eyes, because we've figured out ways to work around it, or there's different credit enhancement type opportunities that you could use to mollify the situation. So it's really just, it's understanding the dirty details of an underlying business and having a banker that can get into the nitty gritty and that open and honest communication.
There's times I always pose two scenarios. So if you have a file come in to you, two different files, one comes in, has a little bit of riskiness to it, but it's well organized. The owner took the time, put it right up in, pointed out the flaws and the problems, but gave you an explanation. So it doesn't look perfect, but they explained it. Or you have a file that comes in that looks super perfect with no explanation. Which one makes you more nervous?
That's a good question. I mean, sometimes things that are so right down the middle, you're like, well, where's the issue? Where's the, what are they hiding? I think the more information, the merrier. Everything's not as rosy as it may appear. So we like to get into the details and would prefer more information rather than less. Or somebody putting an abbreviated package together that's rosy and just conveying half truths.
Or engineered to perfection is the term we use around our office.
Yeah.
How do you think this is going to change banking moving forward, if it is at all?
I think in the immediate term, it's going to have a pretty dramatic effect. Right now, all our resources are really allocated to these programs and helping our customers with their respective hardships. We're doing a ton of payment deferrals. We're doing a ton of modifications. We're doing a lot of different dancing behind the scenes to try to keep some of these businesses afloat, because a lot of folks are having issues. And it's no fault of their own. I mean, they have successful businesses, they're great operators, but if people can't, buy their products or, shop at their restaurant or whatever, they're in a lot of trouble. And this is, again, an unprecedented event. So I think it's going to be, in the immediate term, credit is pretty hard to come by, but things will settle down. And I think that generally speaking, the banks are going to take a little bit more conservative approach. It may not be a hell no, we're not going to look at your deal, but it may be a little bit more equity, a little more conservative advance ratio, maybe rely more on the sponsorship support and ask for a guarantee or a full guarantee instead of something that was more limited in the past. So I think it's going to affect banking specifically in the short to intermediate time frame, but people have amnesia. So 2-3 years, may get back to some aggressive standards. But I think that given how significant this has become, that it's always going to be in the back of the regulators' minds, and that's going to dictate from a credit perspective what we do and how we structure deals. But it's going to be, I think the new normal is a little bit more conservative than it was.
You bring up a good point. So, any of our clients, if they're dealing with a banker or a loan they have, regardless of the bank it's with, or maybe it's even with the SBA or a different vendor, or everybody's dealing with a landlord of some kind or a mortgage, what is the best way for them to approach the bank or deal with it? Should they just go in default and wait for the bank to call them? Should they be proactive and call the bank? I mean, what do you see as the best course of action for these potential business owners? How should they handle that?
I think in my case, I run the commercial real estate lending department. So we've had a ton of folks come to us, specifically in hospitality and retail. Those are the two asset classes that have been just whacked since this thing has hit. And I think office is gonna have some pain here going forward. And multifamily is still TBD. The April rent collections in multifamily was pretty solid, but I think the expectation is that May and June may start to dip. So what we're saying is, if you have a true hardship, come to us and we're going to work with you. And we do that in the form of a payment deferral. So we're not forgiving debt, but we're deferring that debt. And in some cases, that deferral is we'll convert an amortizing loan to just interest only. Or in other cases that really warrant it, we'll defer the whole P&I payment and push it to the end of the loan term to provide relief. We've been very successful when we can justify a hardship to do 90 days. And in some cases, we can do longer, 6 months. But after that, you start getting into what's called a troubled debt restructure, and you have to start reserving a bunch of money. So generally speaking, it's a 90-day program if the customer warrants it, right? So if you can certify a hardship. But if you're coming to me as a real estate landlord and you say, hey, I think I own a multifamily property and I think my tenants are going to stop paying, but they're paying right now, but I think next month they're going to stop paying. It's not really the right time to do a deferral. You got to really show the hardship. If you had, 92% collection rate in April, but you expect 50% collection rate in May, let's wait till May 1 or a week into May to understand what that looks like. And then let's process a deferral, not necessarily get the cart in front of the horse. So we're just being proactive, like with the hospitality group, a lot of hotel operators and a lot of folks that are in the retail sector. I mean, they're not receiving any income. So they went in the example of a hotel went from, 82% occupancy to zero. So, they can't pay their employees. So, and they have no revenue coming in because the government won't allow them to operate. So, those are easily justified deferrals. We can get really creative and move really quickly on those types of circumstances. But I mean, just in any industry with our C&I department, our P&E department, our small business lending department, everybody, it's the same thing. It's just like, show us what happened, give us proof, provide documentation, and let's process this payment deferral so that we can be proactive and keep you in business and not let this loan be, your biggest burden.
It's funny because, I think a lot of the misconception in whether it's our type of clients, hotel clients, anyone in general, I think just humans walk around the earth thinking banks are just made of money and have no problems and no constrictions. Maybe after the financial collapse, people believe that may not be true. However, that was 10, 11 years ago. And like you said, amnesia sets in. What I was going to say is you brought up a key point that you start to have other hurdles that you have to get around as a bank. It's not just about how much money do you have or how you make it, but you have other covenants, other things. You talked about reserve ratios, other things that can cause significant pain to a bank or you have to operate differently out of. Maybe you can just touch on those a little bit so give some of these folks a little bit of an idea that it's not just about you have this endless supply of money. You can send it out to whoever you want and everyone pays it back, or you just take everything. Like that doesn't work. And I don't know if people really understand that.
Yeah, I mean, specifically in the instance of the community banks and the regional players, our lifeblood is lending money. There are other ways for us to make money, but primary function is we have a net interest margin that we have to adhere to. And if we don't meet it, we're not going to make any money, which is why we're pretty not selective, but we're strategic in these deferrals. Because if you start deferring every loan on your books and you have no income coming in for 90 or 180 days, it's a problem. And, again, we have different reserve ratios that we have to adhere to. We have regulators we have to answer to. And so there's a delicate balance, but we're not some of the large players. There's a handful of banks that are considered consumer banks that are in a completely different capital threshold than we are. So these regional players and these community banks, our primary function is to make money by lending it. And if if we're in a pickle and we have a bunch of loans start going bad quickly, we're out of business. So yeah, I mean, I think that there is a misconception that you name a few examples, the big dogs, the credit card banks or the HELOC banks that are out there, the B of A's, the Chases, the Cities, the Wells of the world. Like we're not them. I mean, those are anomaly type institutions that have all sorts of different revenue streams. If you look at us, we're blocking and tackling commercial institution. And most banks are like that.
Just like regular business, just like the customers you serve.
Yeah. we just need to be strategic in how we operate.
You brought it up a few times. It's something we talk about all the time, and it has to do with keeping good books, hire an accountant, have a good bookkeeper. I mean, all of these things, if you had a good accountant, a good bookkeeper, you keep track of all your records and books, then you can come to somebody like yourself with an opportunity of what you need, why you need it, what your loan opportunities for, and all that. Or if there's a disaster and you have a PPP loan and you're applying for it and you need a hardship, you got to have those documents, and they need to be valid and worthy. Somebody can't come to you with 12 months of bank statements and no financials. You have to have an accountant, you have to have a banker, and you need a good bookkeeper, and they all work in tandem. You need good numbers. Vince, I appreciate this, man, a lot. Is there anything that people are asking you or topics that need to be talked about as it relates to this that we didn't cover that we should get to?
Big picture, it's know your banker. The community banks and the regional players are kind of the lifeblood of the economy. If a small business goes into one of the big players and walks into a branch, you're probably not going to get a whole lot of reception. But if you have a soft intro from somebody like yourself to a commercial lending institution, it's going to go a long way. And having that information clear and concise and organized is key. In the example of PPP, those folks that got funded were those that were the most organized and the most detailed, and they were able to jump on it as quickly as possible. And that goes a long way. And folks are able to stay in business because they were organized and ready to react when the situation came to be. So most commercial banks have, different specialists in different areas, and you're not going to be assigned a sort of a jack of all trades. It's going to be somebody that can really have experience with your business or your area. That banker should have a niche, if you will. So don't be afraid to reach out and try to find somebody that's going to help you.
Vince, if people want to reach out directly to you, what's the best way to get in touch with you?
Best way to get me is either call me or send me an email. vchillura@valley.com is my email. V as in Vince. My last name Chillura, CHILLURA @valley.com. Again, I run the commercial real estate lending group, but the bank is a full service commercial institution that has specialists in each area for different types of businesses. And we have some really solid players and folks that can add value. So we'd love people to reach out, and we can get folks into the right departments and with the specialists that they can add value for.
And I really appreciate you doing this. I think this is going to be really helpful for people that get a chance to see it. We'll put this out quickly. And again, thank you very much.
Yeah, thank you guys for having me. I appreciate it.
Thanks, Vince.